You have been asking about candlesticks chart. So here's a video from Creative Commons about candlesticks chart. See all those funny type of candles, right? They look like candles. That is what forms candlestick charts. It actually was started out in Japan long time ago in the 1600s by a guy called Homer, and he found out that this allowed him to actually predict the pricing of rice, because it took into account people's, or rather the traders' emotional reaction, okay, to the changing of prices up and down, and it allowed him to become very wealthy by predicting where the prices would go. No, it's not 100% accurate, but it is the language of the charts, and it's the most popular language that we use. So see you on the inside, study this, and then join our group where you can get our free signals from our robot. See you there, guys. Please note that this show is only for educational purposes. All trades that you see here should be taken first in a demo account and is meant to reduce your learning curve. Having said that, should you want to take real trades, you should consult your financial advisor first. Although I do trade real accounts, I'm not recommending any of these trades for you. It is up to you if you want to follow me and take it in demo accounts. Thank you very much.
Day traders use the Japanese candlesticks charting method almost exclusively. This method was developed by Munisha Hama, 1724 to 1803, a Japanese rice trader who was the first to make use of past rice prices to predict future prices. Munisha became extremely wealthy from the rice trade, and his Japanese candlestick method still serves us well, nearly 3 centuries after it was invented. Here's an example of a typical daily Japanese candlestick chart. That is, a chart showing daily price intervals for a period of 16 trading days. Each candlestick, or candle for short, represents one entire day of trade. In this example, we have labeled 3 different types of candles. 1. A day of falling prices. 2. A day of rising prices. 3. A day of no change. At first glance, Japanese candlestick charts appear to be a bit more complicated than simple bar graphs. However, they are really quite simple. Each candlestick has a body that graphically represents the movement of prices over a specific interval of time, a minute, day, a month, or even a year, chosen by the trader. Look at these 2 candlesticks and note the following. The top and bottom parts of the body show the opening and closing prices. When the candle body is clear, i.e. white or transparent, or filled with green, it indicates that the closing price was higher than the opening price. In other words, the price rose during the represented time frame. When the candle body is filled with black or red, it means the closing price was lower than the opening price. In other words, the price dropped. Most, but not all, of the candles have at least one tail, also known as a wick or shadow, extending from either end of the body. Look at this candlestick and note the following. A tail extending from the upper end of the body is called a topping tail, and it marks the highest price reached for the first time frame represented by the candlestick. For example, the day's high. A tail extending from the lower end of the body is called a bottoming tail, indicating the lowest price for the specific period. Please see part 2 of this video to learn more about reading Japanese candlestick charts.
Thank you for watching our video. Before you go, we invite you to take Trader's free welcome course. It was designed to teach you the basics of Wall Street trading. Click here to sign up for this no-risk, no-cost offer. If you like this video, please subscribe to our YouTube channel where you can view many more stock trading videos. Questions or comments, please submit them below.
In part 1 of this video, you learned that all Japanese candlesticks have a body and that most candlesticks also have tails. But how do these parts of a candle graphically represent a stock's price movement? Let's assume that this candle represents one day of trading. To the left of this candle, we have a simple line chart tracing the stock's behavior over the entire day. Looking at the line chart, we can see that the stock opens trade at a price of $20, drops to a low of $19.50, rises to a high of $21.20, and finally ends the day of trading with a close of $21. Now, let's examine the candle itself. We see a clear or white body, which means that the price closed up for the day. The opening price is represented by the base of the candle body. The close is marked by the top of the body, and the topping and bottoming tails indicate the day's high and low, respectively. In other words, this single Japanese candlestick has done a remarkable job of summarizing an entire day's worth of data from the line chart. Here's another Japanese candlestick. Let's assume that this candlestick also represents one day of trading. Notice that the body is filled with black this time. Looking at the line chart to the left of the candle, we can immediately see a graphic representation of stock prices trending downward over a day of trading. The stock opens the day at $21, peaks with the day's high of $21.20, drops to the day's low of $19.50, and closes the day of trade at $20. Returning to the candlestick, we see a black-filled body, which means that the price closed down for the day. Because the candle is black, we immediately understand that the opening price is represented by the top of the body. The closing price is marked by the bottom of the body, and that the two tails, topping and bottoming, show the day's high and low. Let's take a look at one more Japanese candlestick. When a stock's open and closing prices are identical, the candlestick will not be green or red or any other color, because its body will shrink to becoming nothing more than a horizontal line, as you can see here. This candlestick is called a doji, and it indicates indecision, a perfect balance of power between buyers and sellers. In the line chart to the left of the candle, you can see that the opening and closing prices are the same, $20. The stock did not move around from a low of $19.50 to a high of $20.20, but in the end, it closed with no change. Without a doubt, Japanese candlesticks light the way for traders who know how to use them effectively.
Thank you for watching our video. Before you go, we invite you to join the TradeNet trading team. Our professional analysts will teach you how you can trade stocks from your own home without risking your own money. Click here to learn more about our funded accounts program. If you like this video, please subscribe to our YouTube channel where you can view many more stock trading videos. Questions or comments, please submit them below.